All right, everyone, and welcome back to the Trade of the Week Monday. So, again, what we do every Monday is I just give one idea that is alerted from our swing trading bot and give that to you guys and see what you think about it. Some pretty good trades, right? Last week was HIMS, so we can go over that for a little bit. Uh, Obviously, aided by the crazy gap up that we're having in the market, but it's something that I'm super happy with nonetheless. So, if we go into right here, we take a look at just go into hymns. We can see, right? We talked about it in this area, this $41 up to 57. I'll certainly take that all day long, but that's aided by the fact that the market had a pretty significant gap up so far this week. It's actually doing okay, right? Pull back a little bit off the open, and now it's sitting pretty much right in the middle of its overall range here. So there was a lot of day trades that went off. Again, if you are a SatsEdge Pro member, just get ready. Starting next week, hopefully everything goes according to plan, there will be day trades sent directly to you every morning. They'll be in a Google Doc that gets updated every morning. Also, the swing trading bot is going to alert people in real time. We created a second one. There's going to be a day trading bot. It will alert people as things were triggered, and the bot was shorting right off the open when it came to a lot of these. So a lot of those trades are in the money currently. But we're talking about swing trades. Now, there was a lot of trend following setups that triggered, but those are kind of boring. But we'll go over one is JP Morgan. And the reason the trend following setups are a little bit boring is A, they gapped up well above the price. So I put out a note to everybody in the Discord this morning and said, hey, everything's going a little crazy right now. Me personally, I'm going to wait a little bit because with these trend following setups, you can see I'm on a weekly chart. We're looking for long-term moves because it takes a long-term move for trend following to work in stocks, right? We're looking for something that had, right, this went from 120 all the way up to 300, so over a double, and then has pulled back pretty dramatically, and we're alerting on the break back through. Right, so we're expecting a potential longer move, a continuation of what was this move right here, and a push higher. And we will be in our winning trades for weeks, many weeks to months to maybe even longer, maybe even over a year. So this, I don't know if it's really suited for this series, but there was a lot of this that went through, a lot of triggering when it came to, okay, we're interested from a trend following point of view to potentially buying stocks, but right, we gapped up. So the system is going to have us buying right on this gap up. I'm going to look to see on maybe a daily chart if we pull back a little bit and then maybe base around here and then start to push higher. That's something a little bit more interesting to me personally. But there was a couple from the mean reverting setup. So we'll take a look at that because that's a little bit more of short-term trading. And one that was interesting is this Liquidity Services, which is a retail company that I know nothing about, but that's okay. I don't need to know anything about it. All I know is they had this negative reaction because of earnings. And this is from our mean reversion setup. So this is looking for stocks that are potentially a little bit oversold to the downside. We want to get involved and then be out essentially next Monday, regardless of what happens, right? We buy it. We're looking for potentially a little bit of a bounce, right? This thing is now down 38% from all-time highs, and last week alone it was down another 25%. So the thing is, if it goes down 25%, if it can just retrace any amount of that, right, and get it into this area, that's like a 10% bounce. And that's what we're trying to do with these shorter term swing trades, is just get in, get a couple bucks, get out, and move on with our lives from there. So nice little looking trade here. The reason I like this one as opposed to some of the other ones that triggered is if you look at this prior high right here, we broke out of that high, we came back to it, so there could be some price memory going on here. Long-term chart looks great. It's obviously very strong. We're not doing mean reversion on junk that's hitting new all-time lows. We're doing mean reversion on stuff that is in a primary uptrend and is just pulling back pretty dramatically in that primary uptrend. So if you had bought, this dramatic pullback in the uptrend or this dramatic pullback in the uptrend, they all kind of resolved higher. So interesting look on this one. The one thing that I don't like about these is that they're pulling back on a day that the market is so strong. However, we'll see. So the entry price, the thing that was alerted to everyone, was basically 24.60, I believe. So it came in at 24.60. I got involved in some right away just because I have sometimes the orders just out there, or when the orders come through, I just kind of hit the button to get involved. The idea is if we can just bounce somewhere and fill this candle right here. If you take a look at the daily chart, right, what we're looking at is that it had this big gap down, and we're basically buying as it's pulling back into this earnings candle that some buyers came into. We're trying to get involved here, and if it can just bounce up into the 26, 27, we're looking to get out. But we use time stops on this. So I did have a question in the room. They said, hey, the stops on these are pretty wide. And that's because in my testing, it's honestly better if you don't use stops at all. Because what we're doing is we're splitting our portfolio into a lot of trades all the time. You're dealing with risk by just diversifying across a lot of systems, diversifying a lot of across a lot of assets. So the only reason we have stops are for some sort of disaster recovery. So what we use, and I've talked about this in the channel before, is called time stops. We know from my studies of this particular setup that it's roughly a week to 2 weeks is your maximum amount of gains. If you start holding them for 3 or 4 weeks or longer, the equity curve turns negative. It stops making money as a strategy. So the benefit of that is by using something like a time stop, regardless of what happens at this time next week, we'll be out. So if the stock doesn't move, we'll be out. If it sells off, then that will be a way to manage our risk. And then if it rips, then we'll take our profits there. So the time stops for this work phenomenally. That's how we're managing risk on this particular trade. So that's a trade of the week for this week. I will just say for everybody, as just kind of a note, just because I'm talking to you, is that massive gap up, right? The market is now down. I'm just measuring here. The market is now down or up 20% from its lows. That's pretty significant. And it all happened in like a month. So the note that I gave to the people at Stats Edge this morning was, listen, if you bailed out at the lows, don't get too beat up about yourself. It happens. And if you bail out at the lows, just make sure you don't make the second mistake, which the second mistake would be completely FOMOing back in at what potentially could be a high. And I'm not saying this is, I have no technical reason to call this a high. I just know there are traders out there that they completely FOMO at the bottom, and then it's kind of like the pain gets too bad and they sell at the bottom. And then as the thing's ripping, eventually it gets to the point where the pain is too bad and they just buy into that rip. Just don't do that. If you do not have a plan, or if you do not have a system in which to get into or out of trades, again, come on over to statsedgetrading.com. All of the systems are listed on my website. We have day trading systems coming. I have some more swing trading systems that I'm launching after the day trading systems are out, that I've been testing in the background and kind of theory crafting. If you don't want to do that, build a system for yourself that eliminates this kind of thinking. So you're not one of those people who are puking at the bottom and then buying back in later. At the very least, if you're losing money at that point, or not making the optimal amount of money, you have a system that you can go back and tweak, right? This is what we talk about in the podcast and all of this all the time. It alleviates a lot of the mental burden where you're not caring about any individual trade or any individual trading decision. You're caring about your system, and that you can tweak the system over a long run and not the individual trades. I just know there's a lot of emotions on both sides. This has been a very emotional year for people, and I don't think it's over. I think there's probably more of it coming. So just make sure that you understand that, hey, if you FOMO or if you puked out at the bottom, that's okay. Just don't FOMO in at the top. Take this time and develop a system so that this will never happen again. That should be your goal when it comes to trading. I'll talk to you guys soon.